There are moments in a stock story where you can almost feel sentiment shifting, not because of one specific headline, but because the broader narrative begins to catch. That's what we might be seeing right now with Opendoor Technologies, ticker symbol OPEN, which closed Friday up by 94 cents, or just over 13%, finishing the session at $7.97 per share, and then added another 5 cents in the aftermarket. It's the kind of move that doesn't happen by accident. There wasn't one explosive catalyst or breaking headline, but rather a convergence of positive signals that together are starting to reframe how investors view the stock. Let's break this down. Throughout last week, several tailwinds quietly built in the background. First, we had confirmation that investor Mike Alfred took a substantial position in the company, around 210,000 shares at $6.44 apiece. That was a strong statement of confidence from someone who's not just a speculator but an established fintech investor with a track record of spotting value in disruptive sectors. His exact words were, "I believe the company has a massive opportunity to reshape the US real estate and mortgage market. I'm a fan of the new CEO and board members and stand behind Eric Jackson and the Open Army." That kind of message resonates. It sends a signal that beyond retail enthusiasm, there's real institutional-style belief forming in what Opendoor is building under CEO Kaz Nejatian. Then, right before that announcement, we had September housing data come in stronger than expected, showing resilience in both sales volume and pricing despite lingering rate headwinds. For a company like Opendoor, which depends on transaction flow, better-than-expected housing numbers are a meaningful tailwind. It supports the idea that the US housing market may be stabilizing, perhaps even turning a corner. Add to that the anticipation of two key upcoming catalysts, the Federal Reserve's next rate decision on the 29th of October and Opendoor's own earnings call the following week, which the company is calling an open house. Investors are clearly positioning ahead of both. Now, something else that shouldn't be overlooked is Kaz Nejatian's recent activity on X, formerly Twitter. Over the past week he's become far more visible, replying to posts, sharing light-hearted updates, and giving small glimpses behind the curtain of life at Opendoor. In one recent post he said he'd officially been added to Opendoor's PagerDuty list, calling it a rite of passage for every product manager. It was a simple post, but it landed well. For investors, seeing a CEO who's engaged, transparent, and human on social media builds confidence, especially in the wake of leadership transitions. Kaz's style is very different from Eric Wu's before him. He's pragmatic, product-driven, and connects easily with the tech and retail investor communities. That subtle increase in communication has contributed to a more positive tone among shareholders online. Eric Jackson, Open Army's general, also deserves credit for continuing his 60-plus day campaign of daily updates, reinforcing conviction and rallying what's become known as the Open Army. He recently noted that he'd spoken with someone from Opendoor's LA team and confirmed that the company is now in a quiet phase leading into earnings. That kind of transparency, even in small doses, keeps investors aligned on expectations. So when you put all of this together, a major new investor entering, improving housing data, a visible and confident CEO, an engaged chairman, and two major catalysts on the horizon, you start to see why Friday's move may not just be a one-day pop. It might be the beginning of renewed accumulation around this stock. From a technical standpoint, the $7 level had acted as a critical floor for several weeks. Opendoor tested it multiple times, dipped below it briefly, and then on Friday launched nearly a full dollar higher to close near $8. That's a very strong sign of support being confirmed. If it can hold above $7.50 to $7.70 early next week, we might be looking at the start of a new short-term base, potentially the setup for a breakout once the company reports earnings. Let's also not forget the bigger picture. Opendoor's model is built to benefit when housing activity picks up, but more importantly, it's now leveraging AI and automation in a way that could permanently lower its cost structure. Between the rollout of Ernie, the AI sales agent, and Chloe, the new customer interaction bot, the company is automating the early stages of the sales funnel that used to overwhelm its human teams. That's not just efficiency, it's scale. And that kind of technological scale tends to attract capital once investors realize the leverage it creates. So when we see a move like Friday's 13% gain, it's not just speculation. It's the market starting to price in potential. Now, let's look ahead. This coming week is shaping up to be the first real test in a 3-week catalyst window. First, the housing data has already been released and was better than feared. That's a tick in the win column. Next, on the 29th, we have the Fed rate decision. Expectations are leaning toward another dovish hold, with Chair Powell's recent comments suggesting the committee remains data-driven but cautious about over-tightening. Lower long-term yields have already begun to ease mortgage rates slightly, and that's exactly the kind of trend that supports Opendoor's transaction model. Finally, the following week brings the company's earnings open house. Investors will be looking closely for early signs that the new leadership team's changes, from workforce rebalancing to AI implementation, are beginning to translate into measurable progress. Even if those improvements are incremental, markets often reward directionality, especially when the macro environment starts tilting supportive. So what should investors be watching heading into next week? 3 things stand out. First, volume. If we continue to see elevated volume with price stability above $7.50, it suggests institutional accumulation. That's been absent from the stock for months, so its return would be meaningful. Second, communication. If Kaz or Eric continue engaging with investors online in the days leading to earnings, it helps maintain sentiment. Right now, that visibility is worth more than any analyst note. Third, macro tone. The broader market is bracing for the Fed, but remember that housing-sensitive names tend to move early. If investors start anticipating a friendlier rate environment, Open can easily benefit ahead of confirmation. Now, let's touch briefly on the valuation narrative. Zacks Investment Research recently highlighted that Opendoor appears undervalued relative to peers in the real estate tech space. When you line up metrics like price to sales or price to book against other growth names, Open still trades at a significant discount. That's despite having one of the largest transaction datasets in the industry, which, in an AI-driven world, is becoming an increasingly valuable moat. The market has been slow to price in that data advantage, but it won't stay overlooked forever. And if you zoom out even further, remember this: the US housing market represents roughly $2 trillion in annual transaction volume. Even capturing a single-digit share of that space at steady profitability puts Opendoor in multi-billion-dollar territory. That's why long-term investors like Mike Alfred are calling this a generational setup. It's easy to forget when the stock has been stuck trading sideways between $7 and $8, but that's exactly how many great turnaround stories begin: long, quiet accumulation phases that eventually break into trend when catalysts align. We saw it with Carvana, which traded flat for months before exploding higher once sentiment turned. We saw it with Palantir, which lingered between $8 and $18 before launching past $150 during the AI boom. And we could very well be seeing the early signs of that same dynamic here. Now, let's be clear, nothing moves in a straight line. The market will likely remain volatile into the Fed decision. But the combination of improving macro data, strong insider alignment, and investor visibility is exactly what you want heading into a catalyst-heavy fortnight. So as we head into the weekend, it's worth appreciating where this stock sits. It's holding comfortably above its multi-week floor. It's attracting serious investors. Its CEO and chairman are active, engaged, and clearly focused. And the macro winds, after a brutal 2-year stretch for housing, may finally be shifting. Sometimes, a 13% day isn't about euphoria. It's about confirmation. Confirmation that the base is real, that sentiment can turn, and that the long game is still intact. Heading into next week, all eyes will be on whether Open can build on this momentum. A clean hold above $7.80 would confirm strength. Any pre-Fed dip back toward $7 could simply offer another opportunity for those who missed this week's move. Either way, the setup looks better today than it has in months. So if you've been following this story closely, this weekend isn't just about celebrating a strong Friday finish, it's about preparing for what could be the most pivotal stretch of Opendoor's year. The company is quiet for now, but the market? It's beginning to speak. And right now, it's saying that Opendoor might finally be turning the page.